Thank you very much for coming back from our final break for the day. And I'm really excited about the next few tracks. So there's going to be a few really interesting things, hopefully, to learn. So hopefully your brain hasn't suffered overflow on too much information already. So hopefully there's still a few new things that you can take in and process. And especially for this panel, I'm super grateful for our host who has taken over on last minute. So I really think we all need to do a really great job to welcome him very warmly. Not only him, of course, also the whole panel. But he's going to talk about what's coming next in VC and global trends. So please welcome Francois Chopard from Starburst Ventures on stage. And he's just taken over last minute. So I think I really appreciate, 10 minutes ago, he said, because we had a health-related switch over. So thank you so much, Francois, for coming and taking this over. And please introduce your panelists. And thank you much again.
My pleasure. So it's the late afternoon, but the topic is going to be very interesting about global trends and where VC are investing right now. So to talk about that subject, I'm going to call Rob from Hoxton Venture. Rob is based in London. We're going to have Gwen from Entrepreneur First. She is based in Paris, but her organization is headquartered in London, and she's from Singapore. Gwen, welcome on stage. Fang from Baidu Venture. Fang is based in San Francisco. Rob, come on also. Yes, and then Brahm from Round 13, based in Toronto. Yep.
Hello, everyone. Brahm Klar. I'm a venture capitalist based in Toronto, Canada, at a fund called Round 13. We manage approximately $250 million, invest predominantly in Series A businesses, often writing checks between 5 and 15 million. We're a generalist firm by nature, but have developed a particular interest in B2B SaaS, e-commerce, and fintech in the last few years. Started my career off on the investment banking side, a number of years in private equity and venture for the last couple.
Sure. So I'm Rob Kniaz. I run a fund in London called Hoxton Ventures. We're early stage investors, so generally Series A and maybe a bit of seed. Our biggest investments are things like Deliveroo, Darktrace, Babylon Health, so we're also quite generalist overall. And for us, it's really about deals that we think can be massively big outcomes, which almost always means scaling into the US, either going there to raise capital or more likely going there to sell, building an office, building a presence. So keeping a lot of your team here, keeping development in Europe, which makes a lot of sense, and then selling to wherever the biggest and best customers are, which is almost always the US.
Hi, I'm Fang. I work at Baidu Ventures. We are a non-strategic fund. I'm based out of San Francisco. And we invest into early-stage AI and robotics companies that are enterprise-facing. We've done about 40-some deals outside of Asia since we got launched about 2 years ago. And we've also done a lot more deals in China because we've got 20 members of the team based out of Beijing as well.
Hi, everyone. My name is Gwen, and I'm an entrepreneur resident at Entrepreneur First. Entrepreneur First is a talent investor. We focus on deep tech. What does talent investor mean is that we invest in individuals before they have an idea and before they have a team. And so basically there's like co-founder dating, and we help them form teams, and then we invest in them. So my role is to help the PhDs and postdocs we have across many deep tech domains commercialize their tech to form companies. So we're creating deal flow for all these people right here. And I'm based in Paris and Singapore. We have already, over the last 8 years, a portfolio of more than 230 companies spread out across Europe and Asia, portfolio valuation of more than 1.5 billion right now. So excited to talk about talent investing.
So to introduce that panel, what is interesting is that as a CEO, as an entrepreneur, to understand that each VC has his own sweet spot in terms of investing. So some will be investing geographically, and we'll talk about. Some will be investing in different stage, whether it's Series A, very early stage. Some will invest in AI and others. And so what I want to understand from each of you is what are your specificities, and then what are the different trends that you are seeing what you've been investing the last 2 years may be different from what you're going to be investing in the next 2 years. And right now, everybody's talking about AI, and there are different applications. Biotech and genomics are also big trends. I'm more interested in transportations in any kind. So maybe Fang from Baidu, can you tell us more about AI and other trends?
Yeah, I think that's a really good question. I actually came from a smaller VC fund called Comet Labs before I went to Baidu Ventures. And basically my boss there, he became the head of Baidu Ventures, and both of us moved over about 1.5 years ago. But Comet Labs was special in that about 4 years ago, they started just investing to only AI and robotics companies that are early stage. So we've been seeing this trend for quite a while. And I think a couple years ago, investors didn't really understand what AI was. I think very few people really understood that, and nobody was really specialized in just AI. So at the time, people were trying to figure out, like, what does AI actually mean? And now I think everyone's become much more sophisticated about it. So when you're talking about AI, it's like, what are you actually talking about? You're talking about NLP? Are you talking about reinforcement learning? What does it actually mean? And so I think the questions are also getting more sophisticated, and we dive deeper a lot more. So I think in order to really sort of wow investors, you have to really understand what you're talking about, because we are going to get to a level of technical detail that maybe prior to this people were not getting to. I think the second thing that's really important to note, though, is that a lot of times it's not about the technical skill of the team. It's really about the business model. Does it make sense, right? You might find a way to say, like, and I've seen this so many times, like, let's say you can identify whether this is a skin cancer or a mole. Great, but what's the business model for that? How do you earn money from something like this? I think that's the trickiest part that I think entrepreneurs really need to keep in mind. It's not just about the technology. A lot of times the technology is the easier part to do. It's like, how do you build defensibility around this? How do you build like a business model around this? How do you sell into like a certain space, especially enterprise spaces? Do you understand how the industry works? Do you understand who the stakeholders are? Do you understand what their incentives are? Do you know how to understand, do you understand how to align incentives? And I think those are the far more important questions that people are sort of diving into, and I think people need to have really good answers for that right now if they want to fundraise.
And so inside AI, do you have some preference, or it's just about the business model? And do you invest in something else than AI?
So our investment thesis is pretty structured. We have two parts to it. The first part is we invest into companies that are able to generate new data sets or help generate new data sets, or generate existing data sets in ways that are much more efficient, accurate, or cheap. So a lot of this stuff is more on the deep tech side of things. We do both software and hardware investments. So we've invested into like a 4th generation solid-state LiDAR company, a new type of radar company, a sub-millimeter sensor company. So anything that captures more information about the environment around us. Because the overall thesis is that with more data, which is what's actually really driving AI these days, plus better algorithms, plus better compute, you can have a lot of disruption. So the first category of companies we look into are really companies that are generating new data sets. The second bucket of companies is really, what do you do with these data sets? And that's really AI applications. So there we look for teams to understand both the industries they're selling to, as well as the technology. And we have to agree with their strategy and their vision, and their implementation. And there it could be AI applied to agriculture, construction, financial services. So we're somewhat industry agnostic, but we're more thesis driven. So we'll do our research within each industry vertical and try to think about which companies we want to be talking to, or which companies we think will dominate, because we understand the industry vertical well and we can ask the right questions. So that's typically how we end up making our investments.
Fang, you have a little bit, Gwen, yes. You have a little bit different thesis, which is deep tech, so a bit broader than AI, but also the entrepreneur itself. Can you elaborate a little bit more about that?
So what that means is that when we recruit and choose the individuals to invest in, we are going to the universities and the research labs, bringing these people with again, PhDs and postdocs. You're talking about fields as diverse as not just AI, but quantum computing, CRISPR, gene editing, specific stuff, some theoretical, advancement in physics, biology, and stuff like that. And when they come in, it's a symbiotic process, right? So when we invest in an individual, let's say like there's 4 of you right here, you're all strangers. When you come into our program, you're meeting for the first time, and there's basically, it's serendipity, you're meeting one person, and through that, you're trying to determine whether you have a fit as a potential co-founder. So we believe it's a symbiotic process in the sense that your background with that person's background, whatever you talk about is going to be very different from what you will talk to the next person about. So this is kind of like co-founder, you're trying to find your co-founder within this group. which means that while we bring in these PhDs and postdocs, we don't actually know what the companies will result. So it's all, by definition, led by the technologies. So sometimes we may bring in a CRISPR person, but in the end, maybe the CRISPR person couldn't find a co-founder, and then we have no CRISPR company. But for example, in Paris last batch that graduated in March, we actually presented a company that was formed by a CRISPR PhD with a guy who did product marketing at Google, for example, and together they formed a company that is CRISPR gene editing plants to remove pollution in the air. So that was something that we couldn't have thought of before, right? But we brought the people together and then magic results. So it's a very different thesis about like having a certain like AI focus and stuff, but it's more like we believe in the people first, and then we believe that when a bunch of brilliant, motivated people come together, different kinds of magic will result.
But just to come back on deep tech is some kind of a new subject of investment. We are not, even the term deep tech, we're not in a VC language, 3-5 years ago, and now it's becoming much more common. What do you see deep tech as a trend and evolving along the next years?
Yeah, deep tech definitely has been a term that's been bandied around, especially the last few years, and we're like, yeah, we kind of saw that coming, like some time ago. So I'll first define deep tech as using very fundamental, a niche technology to change something, to have a paradigm shift. So what this means is that when we look at these deep tech people, we are looking for people who have a very, very deep expertise that only 100 people in the world will know, essentially. And so when talking about trends, we have seen over the last few years that, for example, in Europe and Asia, where EF operates, that there's a lot of new funds investing in deep tech, but more importantly, it's more the realization that there's so many good technical talent in universities and great research labs out there, but all these technologies are locked within the research labs. So we're helping kind of liberate and commercialize these technologies. So technology transfer offices have existed for years, right? So we are bringing that concept, taking to the extreme by selecting those technical people whom we think have the potential and motivation to become an entrepreneur, to go down a new path of entrepreneurship, and give them a platform to find a co-founder and build a deep tech company.
Okay. Rob, you based in London, you coming from Silicon Valley. Can you tell us more about how you invest and what you see for the future?
Yeah, so probably similar to everyone here. I mean, we look for things that are pretty disruptive, and it sounds kind of basic to say this, but there are a lot of companies that probably shouldn't take venture. If you're building a business that's nice, that might turn into a $20, $30 million business, that's great for you. You can make a lot of money. But venture puts you on a much faster treadmill where you have to really keep performing. So for us, we look for things that specifically can take that kind of jet fuel and potentially go to the moon or burn out. But it's kind of a binary outcome where either you're very successful or you fail hard. And often that means going very big to the biggest markets, which, going back to what I said earlier, almost always means going to California. And again, Europe is interesting because there's a lot of arbitrages here that because there's less capital, companies are valued a bit lower here, salaries are a bit lower. People build engineering offices in Romania because it's cheaper to hire an engineer than London. It's cheaper to hire an engineer in London than it is in California. So there's kind of a nice arbitrage now that increasingly you're seeing companies can start everywhere, right? UiPath can start in Bucharest and scale up and be a $6 billion company by eventually going to the US, building sales offices there, but keeping the CEO and the heart of the company here in Romania. So for us, it's really that. It's going across the continent, going from end to end to small cities, big cities, trying to find stuff that we think can be really, really big and take over the world eventually. Some of our stuff is AI. We're not specific around the technology. Some of our companies are quite simple. Some of our companies are quite deep tech. For us, it's really just the opportunity, and can they commercialize it? And if they do make it, can it be a massively big outcome? Again, kind of simple Silicon Valley standards. I think historically, European venture was a lot more run like PE firms, where folks were looking for very safe deals that would be 2x on the upside, maybe 0.9x on the downside. And I think if you look at the history of Silicon Valley and the people that have made serious amounts of money in the Valley, it's shooting for those deals that are going to be zeros or they're going to be 20x times deals. So we very much model ourselves after that, the classic benchmarks and Kleiners and Sequoias of the world.
And so what about geographies? You're based in London. Are you focused on mainly UK, or which other countries in Europe are looking at? Are you looking at new countries?
Yeah, so we're entirely agnostic. If you're in the EU or on the periphery of the EU, that's fine by us. If you have a great deal in Serbia, Romania, or Berlin, wherever, this is a business that you have to go to your customers, and our customers in a lot of ways are founders. So we're quite wide open about that. I mean, it's obviously harder depending where you're at, that if you need to hire scaling talent, it's harder to hire that in Vienna than it is in London. So again, depending on the business, there are a lot of considerations around what sort of people will you need, how do you think about that hiring plan. Just by virtue of where the startups are, we probably do about 60% of our investment in the UK, and most of that's in London. We spend a lot of time in places like Berlin, Stockholm, Barcelona. We have deals in Zagreb, Vienna, Frankfurt, Stockholm. So, and I expect for our continued investing, we'll have lots of new cities that we've never covered before, but we go once a year and we see the good deals, and hopefully we find one we like.
And so, London and Berlin being the two main places, have you seen new cities emerging on the tech scene that you want to spend more time in, or?
Yeah, I mean, I think in general, there's kind of two forces at work. That when you're scaling up, if you need to hire like a VP of finance or a VP of product or the talent that helps build the organization, those are harder to find. And frankly, the best talent in the world for that is still in Silicon Valley, where you'll have 500 ex-Google product managers available if you're hiring a product manager. London probably has the next best concentration of anywhere else in Europe. So that's a factor for a lot of companies, that if you're doing something and you need to scale and you need to go from 10 to 100 to 500 people, that talent is generally easier to find in London. So I think for a lot of companies that are building organizations, are drawn to the bigger clusters. Again, London, maybe Berlin as a lower second. But again, if for some of the stuff, for the deep tech, for the raw coding experience, you can go to Minsk and find 5 brilliant guys that came out of college together that are amazing coders, building the first generation of filters for Snap or something like that. So it's a business we have to cover all the bases. So we have to go to Minsk periodically, see what's going on. But by value and by dollar, most things will happen in London.
Brahm, you're based in Toronto. And you have different investment thesis. Can you tell us more about it?
Yeah, absolutely. So based in Toronto, invest across North America, though our investments are predominantly in Canada. And we probably do take more of that private equity style approach to venture investing. We're really driven by our research and diligence process. So to give you some rough numbers, we probably look at about 1,000 deals a year. We probably spend at least a week in pretty good detail on about 50 of them. Probably spend about a month on 10 to 15 of them, maybe longer. And then we probably invest in 2 to 3 of those each year. And we have a variety of guiding principles that try and help us narrow that filter down a little bit. And this includes things like being either the market leader in your category or showing a clear path to become the market leader. And that doesn't necessarily mean size. It may be best quality, best respected by customers, able to attract the best talent, variety of interpretations there. We love multiple ways to be right. That's another very important criteria for us. So we don't particularly like to hitch our wagon to one particular outcome. We like plans B and C to be pretty solid alternatives as well. I would say that we also love investing in management teams that have done it before, or at least have partners in the team that have done it and have experience and track records of success. And so we sort of start with those guiding principles and try and filter it down. And then we also filter down heavily based on check size and geography as well. Our sweet spot is about $10 million per investment, and we go a little bit more concentrated because we take comfort in the diligence effort that we've applied to hopefully reduce our downside. We don't really spend a lot of time predicting the upside or return potential of a venture deal. Venture capitalists have been generally quite terrible at figuring out where deals are going to go over time, so we don't spend a lot of time on that. And what we love too is data sets that are informative. So businesses that are hopefully at 4, 5, 10 of recurring revenue and with enough customer diversification where we could run some good analysis and say, hey, this is what's happening to the business. If we give them $10 million, this is roughly where it will go within a reasonably narrow bandwidth. So I'd say that's generally what we look at, sort of 2 quick hits Our most recent investments that sort of summarize that, a company called Bold Commerce, which is the largest provider of apps to the Shopify ecosystem, about 50,000 customers doing 25 million in recurring revenue. Lots of data there to assess the outcome. Another business called Hi Mama, a leading provider of software serving the daycare industry. They have about 3,000 customers doing about 5 million in recurring revenue. So we try and take a lot of comfort in data.
And do you see a trend or some evolution in the theme you are invested in, or it's been the same pretty much?
Yeah, I'd say we're at our core bottoms up. We have a couple of sort of high-level theses that help us, sort of drive where we spend our time. But look, I'd say every presentation we see today has some AI angle on it, and it's either real AI, which is we've hired some really smart AI people. We don't know exactly how we're going to make money, or we're not at all AI, but we put AI in our slide because you get a 2 turns valuation bump if you have a good page on it. So we try and stay out of that battle and focus just on businesses we can understand. What I'm really passionate about today, as many venture investors are, is B2B SaaS focused on a particular vertical with a payments angle. I'd say that's where I'm spending most of my time.
Gwen, you're again based in Paris, headquarters are in London, you're from Singapore, your program is based in different locations. Do you see any differences, either in terms of founders, themes that are emerging, and how would you compare these different elements?
Thanks, that's a great question. There are some similarities and differences, I think, when you look at across Europe and Asia. So I myself have spent 13 years in the tech startup space, mostly in Asia, a little bit in Silicon Valley as well, so now Europe. So I think, for me, when I look at the founders, I would say no. Just because in EF, we are looking for that super ambitious, super smart, talented individual, right? And these people exist everywhere. So when we look for the individuals, again, we're looking at the research labs and the university. So I would say for us, the individuals are not any different from like a Paris, London, Berlin, or Bangalore kind of founder. But we do see some differences in terms of the markets, because the different markets, environments, and countries, do dictate a certain kind of the business models that might result. For example, in Southeast Asia, you have way more developing countries compared to Europe, for example, right? So traditionally, when I look at the businesses that are successful in both regions are definitely different. But because we focus in deep tech, we are trying to help create these companies that are able to go global no matter where you are. So for us, even though if they start in Singapore or they start in Paris, even though their first market might be their home country just because it's just easier to get things started there, by and large, after that, it's immediately global. So we do see in terms of the starting point might be different. It may change a little bit of business model, but after that, it's the same everywhere else.
At least that's what you are trying to look for.
Yeah, that's what we're trying to create, exactly. Oh. I mean, I can talk more about B2B consumer, but that's a different story. Yeah, it's very, very different for that, for sure. But just because in Europe, why for example, Paris was one of the later offices to set up just in October last year. Why we chose to open in Paris is because there's so much technical talent in France, right? And the whole French technology scene is really just coming up. And so we wanted to capitalize on that and again, help all these, create more companies.
Fang, you're based in San Francisco, you're working for a Chinese fund. Do you see any difference between what's happening in the Silicon Valley and what's happening in China on AI, but on other subjects? And do you see different trends or different patterns?
It's a good question. I don't actually cover investments in Asia, but we do go back to China once or twice a year to chat with our China team and meet our Chinese portfolio companies. And we sometimes take, whoever's interested from outside of Asia to come to China with us and meet, their potential counterparts or other people in Asia. I guess the trend that I see is that, especially in the areas of AI, China is more advanced in some areas, but not all areas. And I think the level of ambition in China, for some reason, seems to be higher, in the sense that everybody works hard. But I mean, China is known for having the 996, which is like 9 a.m. to, actually 696 probably. Is 986? Oh, sorry. I'm forgetting. Okay, so it's like 9 a.m. to 9 p.m., 6 days a week. The reason I pull back is because I think it's actually earlier than 9 a.m. they actually get into the office from what I've seen. So it feels like it's more like a 696 to me. But I think what it is that because China is such a competitive space and there are so many people, the moment you do something that's very interesting, for sure you're likely going to have a lot of competitors very soon. So in order to stay ahead of the pack, you really have to execute at a level that's just impeccable. And that just takes so much work and effort. You just don't see that level of competitiveness, not even in Silicon Valley. It's hard to explain, but I'll just give you one example. We've invested into a smart lock company in China, and the level of sophistication that they do in their smart locks is beyond what I've seen in the US. And so they can have a smart lock that you can use for one house, up to, I think, maybe 50 users can be registered for it. It will recognize you by your fingerprint when you get into the house. Like, if we're all sharing the same place, I could leave a voicemail for you, and then I'll identify you by your fingerprint when you get into the house and just have you hear the voicemail, but nobody else hear it. And also, logistically, because in China, the cost of labor is a lot cheaper, if you want a smart lock installed in your door, you just call them up anywhere in any major city. Within the hour, they come to your house and it's installed. Like, this level of sophistication doesn't exist anywhere else. It's just so operationally complex that it's very, very hard to, I think, get off the ground in many other countries. And in the US, we have a lot of very strong founders as well. I think you don't need to be as competitive in some ways to be as successful. There just aren't as many people, as many competitors. So I think that the environment is just different, and that creates different types of companies. And also, like in China, the environment is different in general. Like, everybody's on WeChat. Like, there's a lot more in some ways of monopolies in different categories. So the execution that you need to do is also different as well.
And maybe as one of the last questions for you, Rob and Brahm, how do you see VC in 5 years' time? Either your own VC or yourself, but the VC way of investing into startups, at the end, very manually, in a very human way. Do you see it continuing like this, or what's your point of view?
Sure, I'll give the cynical version first, since sometimes I'm accused of being that. So I think there's going to be some great companies that emerge out of the current VC funding rounds, and AI absolutely will be a real thing. I don't know how exactly and in what form in the future, so that will all be exciting. I do think we're facing a huge valuation issue. If you look at the Ubers and Lyfts of the world that trade at massive valuations and aren't anywhere near to making money, I think that will trickle down at some point. There's a great belief that SaaS businesses can just turn off sales and marketing and come to profitability, and I think there's going to be a day of reckoning for that at some point. And so we may see a shift of B2B SaaS, which is one of the hottest areas right now, 10 times revenue, no problem, to other areas. That's my prediction.
I think, putting valuations aside, I think that you're seeing the industry mature, and I think you're seeing a lot more funds operate like the best practices of California. If you rewind 10 years ago in Europe, a lot of the funds are run very, very differently than funds in California, right? And venture is a 40-plus-year-old industry. So I think there's a reason why things kind of arrive at the averages they do in California or the styles they do. So I think it's probably a good thing. You're seeing a lot more funds getting created in a lot of new places. There's more money coming into the space. So again, Silicon Valley always has a lot of money and always has in tech. But you're seeing a lot more folks, regional pensions, local investors. You're seeing a lot more money trickle down into this part of the ecosystem. So I think you'll see new funds get created in lots of new places, and those funds will hopefully be better and better operated. So I think you're going to see very much, not quite a democratization, but certainly just volume growth of venture. And I think that's good because increasingly, if you have a venture fund anywhere in the world and you have good companies and good talent, you can potentially build good things. So I think you'll see a lot more things happening from off-piste locations.
Can I add on something?
Yeah, of course.
Two things. So when you look at some of the, not even some, SoftBank Vision Fund is like the only biggest fund, right? I think that has drastically shifted quite a lot of the economics of the VC space because they are throwing, again, 1 billion, 2 billion, whatever billion in companies. So a lot more private companies can stay private for longer and continue losing money, actually, but still they stay private for longer. I think there's one shift that I think affects a lot more because money is trickling down. It affects a lot more the entire value chain. I think second point to the thesis of EF, we started 8 years ago. But since then, we're noticing many more people, kind of more talent investors coming up. So this is a new category that I really, really believe in. Because again, in VC, we always talk about investing in people. We are taking that to the extreme, but combine that with a traditional financing model, which is VC. So we invest in someone first. So just for more clarity, for the first 3 months when someone comes in, we actually pay them a few $1,000s a month to start up. Like, we're de-risking their lives. And after 3 months, if they have a co-founder and an idea and a team, they pitch to us for investment. So I think that this is going to change because ultimately VC is about investing in ideas, markets, but also people. So I see that as a category kind of increasing.
All right, I think time's up. Thank you, all of you, and thank you for listening.